Bitcoin hit $126,000 in October 2025. Today it is trading at $60,000. That is a 50% crash in less than 9 months. $2 trillion wiped off the crypto market, and almost nobody is talking about why it is actually happening, because the real reason is not what most people think. Here is exactly what is going on. Part 1. How bad is it really? Let me give you the full picture first. Bitcoin reached its all-time high of $126,080 on October 2025. Since then, it has lost more than half its value. Ethereum fell to near $1,500 at the lowest point. Solana dropped more than 70% from its peak. The total crypto market has lost approximately $2 trillion in value since the high. To put that in perspective, $2 trillion is larger than the entire economy of Italy. Gone in less than a year. And yet most people walking around right now have no idea this is happening. Part 2. The 4 reasons. Bitcoin is crashing. This crash was not caused by one thing. It was caused by 4 separate forces hitting the market at exactly the same time. Reason 1. The Federal Reserve is not cutting rates. Earlier this year, most investors expected the Fed to start cutting interest rates by mid-2026. That did not happen. Inflation hit 4.2% in May 2026, the highest level since 2023. The Fed has kept rates elevated at 3.5 to 3.75%. Here is why that matters for Bitcoin. When interest rates are high, investors can earn 4 to 5% on completely safe treasury bonds with zero risk. Why would you hold a volatile asset like Bitcoin when you can earn guaranteed returns sitting in cash? Higher rates make Bitcoin less attractive. Simple as that. Reason 2. The US and Iran went to war. In late February 2026, military conflict broke out between the United States and Iran. Oil prices surged. Inflation got worse. The Fed had even less reason to cut rates. Bitcoin, which many people believe was a safe haven during geopolitical crisis, dropped alongside stocks. That raised a very uncomfortable question for Bitcoin believers. If Bitcoin cannot protect you during a war, what exactly is it for? Reason 3. The man who never sells Bitcoin sold Bitcoin. Michael Saylor built his entire identity around one idea: never sell Bitcoin. His company Strategy, formerly MicroStrategy, became famous for buying billions of dollars of Bitcoin and refusing to sell no matter what. Then in June 2026, rumors emerged that Strategy had sold Bitcoin for the first time in years. The market panicked. If the biggest Bitcoin bull in the world was selling, what did he know that everyone else did not? The price dropped immediately. Within days, Saylor said it was a misunderstanding and bought more, but the damage was done. Trust was shaken. Reason 4. Bitcoin ETF investors are pulling their money out. When Bitcoin ETFs launched in early 2024, they were celebrated as a turning point for crypto. For the first time, everyday investors could buy Bitcoin through their normal brokerage accounts. Billions of dollars flooded in. But in May and June 2026, that reversed. Over $4 billion was pulled out of Bitcoin ETFs in the longest streak of outflows ever recorded. When institutional money leaves, prices fall. It is that simple. Part 3. The detail. Nobody is talking about here is something that barely made the news. On June 2nd, the Mt. Gox estate moved over 10,000 Bitcoin worth approximately $739 million in a single transaction. If you do not know what Mt. Gox is, here is the short version. Mt. Gox was the largest Bitcoin exchange in the world in 2014. It collapsed after a hack. The bankruptcy trustee has been holding the remaining Bitcoin ever since and slowly distributing it back to the people who lost money over a decade ago. Every time those wallets move, the market panics, because 10,000 Bitcoin hitting the market at once is a lot of sell pressure. The coins did not actually hit any exchange this time, but the fear alone was enough to push prices lower. This is the nature of crypto markets. Rumor and fear move prices just as much as reality. Part 4. So is this the end of Bitcoin? Here is the honest answer. Nobody knows. But here is what history says. Bitcoin has crashed more than 50% at least 4 times in its history. Every single time it eventually recovered and reached new all-time highs. That does not mean it will happen again. Past performance is not a guarantee, but it does mean that people who declared Bitcoin dead during previous crashes were wrong every single time. The real question is not whether Bitcoin survives this crash. The real question is whether you can survive this crash financially if you own it. Because here is what this moment exposes. People who invested money they could not afford to lose are in serious trouble. People who were over-leveraged are getting wiped out. And people who panicked and sold at the bottom will miss the recovery if it comes. The investors who do best in moments like this are almost never the ones who predicted the crash. They are the ones who sized their positions correctly in the first place and had the patience to wait. Part 5. What should you do now? 3 things. First, do not make decisions based on fear. The Fear and Greed Index for crypto is currently at extreme fear levels. Historically, extreme fear has marked local bottoms in previous cycles. That is not a reason to buy blindly, but it is a reason to think carefully before selling. Second, never invest more than you can afford to lose entirely. This crash is a reminder of that lesson. Crypto can go to zero. Nobody knows if it will, but it can. If that outcome would destroy your finances, you have too much in it. Third, zoom out. Bitcoin at $60,000 is still up massively from where it was 2 years ago. The people losing their minds right now are often the ones who bought near the top. The people who bought years ago and held are still sitting on significant gains. Time in the market beats timing the market. In crypto, that lesson is even more extreme than anywhere else. So, to summarize what is actually happening, Bitcoin has crashed 50% from its all-time high. It was caused by 4 things hitting at once: high interest rates, US-Iran tensions, fears about Michael Saylor selling, and record ETF outflows. Whether it recovers depends on the Fed, geopolitics, and market sentiment. But the lesson underneath all of this is simple. Crypto is the most volatile major asset class in the world. The people who win long-term are not the ones who time it perfectly. They are the ones who never bet more than they can afford to lose. If this video helped you understand what is actually happening, subscribe to Finance Foundations. We break down the biggest money stories every week in a way that actually makes sense. And drop a comment below. Are you buying the dip, holding, or getting out of crypto entirely? I want to know. See you in the next one.